Hello, I'm Tony Lee. I'm the Business Development Specialist here at Alabama Housing Finance Authority. Today we're going to be talking about the Step Up program, but I wanted to also let you know a little bit about Alabama Housing. Alabama Housing was created in 1980 by the Act of Alabama Legislature. AHFA is a public corporation and instrumentality of the state of Alabama dedicated to serving the housing needs of low and moderate income Alabamians. Since 1980, AHFA has helped over 70,000 Alabamians purchase a home using our programs. Uh, Even though we are a state housing authority, we are not affiliated with the state of Alabama. We receive no funding from the state of Alabama. Okay, here at Alabama Housing, we do not originate loans. We work with a network of participating lenders, and the participating lenders will make sure the loan meets credit guidelines. We currently offer two programs, a step-up program and the Mortgage Credit Certificate or the MCC program. We are a master servicer and we service loans under the name Service Solutions. We actually service for 3 other states. We service for Mississippi Housing, for North Carolina Housing, and Arkansas Housing, along with Alabama housing loans. Okay, the process. The borrower will apply through an AHFA participating lender. The lender reviews the application for credit qualifying purposes. The lender then reserves the application via AHFA's lender online site, and the lender then submits step 1 and step 2 packages to AHFA via our lender online site. Once we receive step 1 and 2, we will review the packages to make sure it meets our guidelines. If it does, we will issue the conditional commitment or the approval. Loan will close in the lender's name. The lender must table fund the first and the second and the AIS funds if applicable. The lender submits closed loan file via AHFA Lender Online. Service Solutions will purchase and service the first and the second mortgages. Okay, how this works. There's going to be 2 mortgages. The first mortgage is you have 2 different routes. You can go the FHA or conventional. The first mortgage, the FHA mortgage, is a standard FHA mortgage. You just want to make sure you meet the standard FHA credit guidelines. On the conventional, we have 2 different conventional options, and you want to make sure that you follow the Freddie Mac HFA Advantage mortgage credit guidelines. The first option is the Freddie Mac at or below 80% AMI. On that one, the borrower will qualify for the Affordable Income Subsidy or AIS grant. I will talk about that a little bit later. The other option is the Freddie Mac over 80% AMI. The second mortgage is a market rate down payment DPA program, not a standalone DPA program. The interest rate of that on that second mortgage is going to be the same as the first mortgage. It is a 10-year fixed term. The maximum down payment assistance for FHA is the lesser of 3.5% of the sales price or $7,500. For the conventional, it's the lesser of 3% of the sales price or $7,500. You can reserve or lock this loan in 2 different ways. You can do the 30-day reservation or lock, and that costs 0.5% of the total loan amount. You can do a 45-day lock, and that is 0.75% of the total loan amount. That is the commitment fee. The commitment fee is non-refundable, and we require the funds within 72 hours of making the reservation. We do offer extensions. If you need an extension, we need to know on or before the initial reservation expires. We offer a 15-day extension, and the cost is a 0.25%. The maximum reservation period we can hold a lock is 60 days. So that means if you lock it in for 30 days, we can issue 2 15-day extensions. If you lock it in for 45 days, we can issue 1 15-day extension. The extension fee must be paid within 72 hours of the request, or the reservation will be canceled. If the reservation is canceled, the borrower is subject to worst case pricing. Some of the overlays we have is we have a minimum credit score requirement. For the FHA or the HFA Advantage 80% or less of the AMI, the minimum credit score is a 640. For the HFA Advantage over 80% of Freddie Mac's AMI, the minimum credit is 680. The maximum DTI may not exceed 45%, and this is based off the lender's qualifying income. All loans must receive an AUS finding of approve eligible or accept. We cannot accept any manually underwritten loans. DU or LPA may be used on the FHA loans, but only LPA must be used on conventional loans since it is a Freddie Mac program. Non-occupant co-borrowers are not allowed on the conventional loans. They are allowed on the FHA loans, and I will talk about that a little bit later. And we will not accept any unpaid or unreleased tax liens. They have to be paid off prior to us giving our issuing our conditional commitment or approval. Income limit for the step-up program FHA is $130,600. That is based off the borrower's qualifying income. For the conventional route, the Freddie Mac at or below 80% is limited to 80% of Freddie Mac's AMI. Freddie Mac over 80% AMI, the income cannot exceed $130,600. It is a recommendation from us that you receive preliminary credit approval and or PMI approval before you lock the loan with Alabama Housing. The reason why is because the commitment fee is non-refundable, and we hate for you to lock a loan in and then have to be canceled and then the borrower's out the funds. Effective November 2018, the income calculation for the step-up program was revised to reflect borrower's qualifying income versus household compliance income. We ask that the 1003, the executed 92900 LT or 1008 and AUS findings match and be consistent throughout the file. Since we changed to borrower's qualified income, now we require the credit underwriter to execute either the loan transmittal, the 92900 LT or the 1008, or they can execute their income calculation worksheet. If they execute the income calculation worksheet, that income figure needs to match the rest of the file to the penny. You can't round up or round down. Property types we will accept: manufactured homes, classified as real property, and the title has been surrendered. This is only for FHA only. You cannot use manufactured housing on the conventional product. You just need to make sure it meets FHA guidelines. Detached single family consisting of no more than one dwelling unit, attached single family, 1 unit townhouse or Freddie Mac FHA approved condominium. And the foreclosure properties, you just need to make sure you have affirmative title coverage with no exceptions to the right of redemption. If there is an exception, we would need a surety bond. You need to make sure that this is a primary residence. The owner has to occupy within 60 days of closing. We cannot accept any investment properties or second homes, no properties which fall under the FHA 90-day flipping waiver, and no refinancing of outstanding indebtedness. For the FHA, if you're going to have a non-occupant co-borrower, it needs to meet FHA guidelines. The non-occupant co-borrower's income will not be considered in the step-up qualifying income limit of $130,600. The non-occupant co-borrower will not occupy the residence as his or her primary or permanent residence. The non-occupant co-borrower is a relative of the mortgagor or the borrower. Non-occupant co-borrower is permitted by applicable FHA and Ginnie Mae guidelines, and we will require that the non-occupant co-borrower sign our AHFA non-occupant co-borrower statement. The step-up DPA is an acceptable source of FHA's required down payment. However, lenders must properly document their case binder to include the following. Once we issue the FHA approval, we're going to email the legally binding obligation letter to the lender. We're going to email that to the processor. We're also going to upload that to step 2 on Lender Online. You have to have this document in your package when you send for insuring. If you don't have it, it will not be insured. This is a copy of the letter that we will upload and email to the processor. Okay, on the conventional route, the HFA Advantage under 80% or 80% or under, the borrower will qualify for an AIS grant. If the borrower's income, qualifying income, is at or below 50% of Freddie Mac's AMI, they will get 100 basis points. If the income is above 50% but does not exceed 80% of Freddie Mac's AMI, they will get 50 basis points. This is free money. There's no recapture. There's no payment. It's just free money from Freddie Mac. The AIS funds have to be used for either additional down payment, closing costs, and prepaids. To find out if they qualify, you would go to Freddie Mac's website, click on Home Possible Income and Property Eligibility. You will put the borrower's, the property address in there. It will show the 100% of the median income, the 80%, and the 50%. So you would know there if they qualify. If they qualify, you're going to want to print this out and put it in step 2 package. Things to remember about the conventional. It's a Home Possible Advantage loan. You want to make sure that you run it as Home Possible Advantage for HFAs or a code 251. On the HFA Advantage at or below 80%, that loan has reduced MI and it should reflect on the findings at 18%. The HFA Advantage above 80%, it has standard MI of 35% coverage. You want to make sure the LPA key remains consistent throughout all submissions. We require that one of the borrowers take a homebuyer's education course. It needs to be an acceptable curriculum. All HUD approved, FDIC's Money Smart, Freddie Mac's Credit Smart, Neighbor Works, and approved PMI companies. The PMI companies normally have the free courses. You want to make sure that they receive a passing grade of 70 or higher, and the certificate may not be dated. It cannot be older than 12 months from making the step-up reservation. Things to remember, there is a commitment fee on the step-up program, and it's a non-refundable fee, and it must be paid within 72 hours of making the reservation. All reservations are made via our lender online site, and you will need a username and password to make the reservation. We require AUS findings of approve eligible or accept only, absolutely no manually underwritten loans. The minimum credit scores for HFA, FHA Advantage 80%, for FHA, HFA Advantage 80% or less of the AMI is a 640. For HFA Advantage over 80% of AMI is 680. The maximum DTI cannot exceed 45%. Cost and fees associated with step-up program. Of course, there's a non-refundable commitment fee paid to AHFA based on the lock period. You may charge your regular closing cost items associated with the first mortgage loan that are customary, but you cannot charge an origination fee or a discount fee or discount point. A lender announcement on 11/6/18 gave an updated fee structure effective 1/2/19. Now we charge a $200 loan funding fee and a $71.50 tax service fee. On the second mortgage, the fees you can charge is a per diem interest and a recording and transfer tax cost and MERS registration fee. There's no fees associated with the Affordable Income Subsidy Grant. Some contacts you may want to keep for your reference. Brian Hunt is the compliance supervisor. Lisa Treese is the operations manager, and I'm Tony Lee, and I'm the business development specialist. Always feel free to email or call me with any questions or concerns you have about the Step Up program. Thank you so much and have a great day.